Alrighty guys, to the young investors, this is just a short video to be able to help you and guide you with some tips to push you towards the right direction and what will be suitable for you as an investment. Look, when it comes to investment towards properties, just remember there's two things to consider. There's capital growth and there's rental returns. Very rarely, especially in metro areas of most, capital cities and states here in Australia, where you'll be able to achieve both at a really, really high level. Normally there's one or the other, or there may be just a fine balance between the two. Do understand that the reason behind that is this. When it comes to capital growth, so say a property reaches from a certain price point and you want to be able to achieve another price point over a certain period of time, that what actually grows in price is land. You see, the property itself, the dwelling, no matter how good the dwelling is, as time goes on, this dwelling will actually depreciate and lower in price. Whereas the land itself is the most desirable commodity and is the commodity that actually increases in value. So you see, depending on your land portion and what you hold and the potential of that land will determine the type of capital growth that you will experience down the track. I'll touch on that in a tick. Conversely, if you were to have zero land, but actually have, quite a good dwelling, whether be it a brand new apartment, unit, townhouse, and the like, what you'll find is that you're going to get high quality tenants that's going to be really, really looking forward to that modern lifestyle, pay really good rent. But because the land component isn't that great, it'll increase a little bit. But because, once again, your dwelling proportion or the proportion of the value of the dwelling is a bit higher, that actually decreases in value, which is why you see over time units, townhouses, and apartments, when there's capital growth, they usually grow just that little bit less fast as what houses with bigger land allotments will. But just remember, when it comes to these, there's also cost investments initially too. Like in the end, you're gonna be basing your decision on what you can afford. Sometimes maybe if you had a smaller investment budget in mind, getting the high returns initially and a little bit of capital gains later could help you. If you were a little bit riskier and okay with lower rental returns, which means higher monthly payments to the bank on interest and mortgage repayments, certainly you may look at that avenue, but you've got to look at your own situation. Do understand that sometimes properties will get high yielding returns, but very minimal capital growth. On the flip side, properties with a lot of capital growth potential, you'll find that their yields are quite low, the rental returns are quite low, and the outgoings per month and per year are quite high in comparison to something that doesn't have that land component. One thing to look at when it comes to your investment is the taxation side, folks. You've got to understand depreciation, what I said earlier, is something to consider. Maybe that could help you with your investment as well. Depending on your own individual circumstance, different properties will suit your purpose. This is where, for example, a tax advisor, a good quality one, would come in and certainly be well worth your investment as well. They can tell you exactly what to look for based on your positioning and what you could be and should be looking for based on your budget as well. Look, one thing I would like to add as a last point is this. To a lot of buyers out there, they don't understand, or they simply do not think about when it comes to land size. Not all land sizes are the same. If you have an 800 square meters parcel of land that has opportunities to subdivide, it gets rezoned. You have opportunities to build. Of course, that's going to be worth something much more than, say, an 800 square meter allotment that could be in a bowl of a court that has a sizable dwelling on it already, that is unable to be subdivided, that's in a residential zone that you simply cannot build upon or build multiple dwellings on. They're not the same, so that's something to factor in. So don't just look at land size equals capital growth. It's actually the potential of that land component actually what drives the capital growth as well, or at least the higher end of the capital growth. So that's something to factor in your decisions. Thanks for listening. I hope you found the information useful. If you wanted more information, feel free to contact the team at iSell Group at 8558 3000.